This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora, and welcome to Thursday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. Rising consumer demand in the world's largest economy is still driving the world's economy. A trend that started nearly a century ago, and still it shows no signs of ending anytime soon. First, we should note that the American Thanksgiving holiday starts tomorrow, so there is a big data dump today. Most Americans will have a 4-day holiday, although the bond market will trade on their Friday. That frees them up for the start of the end-of-year retail rush. Given the good shape their economy is in, it is likely to be a positive retail season. US jobless claims rose last week by less than seasonal factors would have accounted for, so the headline change was regarded positively. The level of continuing claims rose too, but not as sharply as they did in the same week a year ago. So no early signs of labour market stress here. And there was a good rise in mortgage applications last week from the week before, and slightly better than can be accounted for by seasonal factors. Perhaps more impressive is that these rises came despite benchmark interest rates rising to their highest level since July. And the October pending home sales rose 2% too, to be 5.4% higher than a year ago. This is a further sign the US housing market may have touched bottom. US durable goods orders rose in October, up 5.3% from the same month in 2023, but by less than expected. And that was because the 2023 level was slightly weaker than normal. Capital goods orders rose 5.4%, although non-defence capital goods orders were only up 2.9%. And the Chicago area PMI came in weak in November, continuing its year-long retreat in a result that would have disappointed everyone. There were no surprises in the second estimate of American third quarter GDP growth, coming in unchanged from the first estimate at 2.8%, and a consistent expansion since the third quarter of 2022. This is an expansion fueled by consumer spending. But the same data showed core PCE rose to 2.8% and a tick up from 2.7% in the second quarter. Although this was as expected, this inflation measure is the one favoured by the US Fed, so it is a shift that they will take into account. And today's US Treasury bond auction of 7-year paper was very well supported, and for the first time in a long while, the medium yield fell from the prior equivalent event. Today it came in at 4.14%, whereas a month ago it was at 4.17%. And China's industrial profits were expected to fall 3% in the 9 months to September, and in the end they came in down 4.3% on that same basis. Not a huge slip, you may think, but year-to-date comparisons hide a lot, and for September alone, they were 23% lower than the same month a year ago. There is a definite profit squeeze going on in China. In India, their parliament was suspended, so that the debate on the links between the ruling BJP political party and the American-indicted Adani Group could not proceed. In France, their government is close to collapse. In the EU, the European Parliament is moving to get the bloc to revoke Hong Kong's special customs treatment and review the status of its Economic and Trade Office in Brussels over a long-running national security trial that last week saw 45 opposition figures jailed in Hong Kong for between 4 and 10 years. Markets thought the October CPI indicator in Australia would report a rise from the September level of 2.1%, but in the end there was no change. Food, however, was up 3.3% and also unchanged from September. This overall result eased financial market fears that the RBA would have to weigh harder against inflation. The inflation hold puts rate cuts back in the frame earlier than otherwise assumed. Australian construction work completed in the third quarter came in with a positive surprise, up 3.2% from the same quarter a year ago. Dragging this result, though, was virtually no change in residential construction. But unlike in the June quarter, every sector made some positive contribution to the overall gain. The actual result was way better than the limp 0.3% expectation. The US Treasury 10-year yield is now just on 4.24% and falling 8 basis points from this time yesterday. And the price of gold will start today at $2,642 an ounce. That's up $13 from yesterday. And oil prices are down $1 at just over $68.50 a barrel in the US, while the international Brent price is just on $72.50 a barrel. And the Kiwi dollar starts today at 59.1 US cents and up a full 80 basis points from this time yesterday. Against the Aussie, we're 70 basis points higher at 90.9 Australian cents. Against the euro, we're 20 basis points higher at 55.8 euro cents. That all means our trade weighted index starts today at just under 68.6 and up 50 basis points from yesterday. And the Bitcoin price starts today at $96,058 and up 1.7% from yesterday. Volatility over the past 24 hours has been high at just on plus or minus 3.1%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.